Hello there, and welcome to the Don't Sign the Lease podcast. I'm your host, George Morales. Thank you for tuning into this weekly look at commercial real estate news. This is episode 121. Commercial real estate bounces back. Commercial real estate bounces back. We've got a bunch of articles to take a look at. We are introducing for the first time this podcast via video format. So if you're listening to this through whatever medium you use, iTunes, Podcast Addict, whatever it is, just be aware you need to consider going to Don't Sign the Lease YouTube channel, and there'll be a link to that in the item description. And follow us if you want to take a look at what we're doing. You know, we discuss a lot of real estate articles and events, and so I'll have the ability now, doing it live here with this video at least, to put those on the screen so you can follow along. Now, this is our first run, so please be patient with us. We don't have a professional studio. I've got my Don Quixote here in my office, along with a brochure right there. I don't know how the newsmen do that, but this is where we are. And before we jump in, I want to remind you, I've got on the screen the Don't Sign the Lease website, don'tsignthelease.com. Not only do you access this podcast, and right now it's the audio version of the podcast. We're going to figure out a way to get the video podcast on there, but you've got a bunch of resources like the book on commercial real estate that I authored entitled Commercial Real Estate Office Leasing. Let's see if it clicks here. There we go. Commercial Real Estate Office Leasing, A Tale of Tenant Representation. Commercial Real Estate Explained and Applied for business owners and realtors. You're able to go in and read a little bit about the book. Also, I have the 5-star review from Reader's Favorite, which is independent book review, and they were kind enough to give us a 5-star. We're thankful to the Lord for that. But you can also order it through the website. Who's this book for? If you want to learn about commercial real estate, you're a business owner, and you need to sign a lease. It doesn't matter if it's an office lease, retail lease, industrial lease. This book will help you learn about commercial real estate before you plunge into that lease. Also, if you're a realtor, if you're a commercial broker and you want to sharpen your skills, maybe you're new, maybe you're a realtor who does residential, but on occasion you get a chance to represent some commercial deals, at least get a copy of the book, and therefore you'll learn commercial real estate lingo and language and be able to help your client and be able to go one-on-one with any commercial broker. It really is a helpful tool. It's a business owner and his broker, and they go about the business of commercial real estate, and I've recorded it here for you. So hopefully it's very anecdotal, a little bit of humor. Grab a cafecito and enjoy copy of the book. If you haven't yet followed us or gone to our corporate webpage, this is what you're missing. See, I can finally show you now live. Blue Box Real Estate. We have about 347 followers. Thank you for those who are following. We're growing, but we post every day. Well, Monday through Friday, not every day. Monday through Friday, we're posting news articles. We're also creating original content. Like here, you'll see we've got a video on the downtown Miami office market. And so what a great way to learn about commercial real estate. A lot of the articles that we talk about on this podcast, our LinkedIn followers have seen it because we're pumping it through LinkedIn. You can touch us another way. You can go to blueboxre.com. That's our commercial real estate firm in South Florida, Orlando, and Tampa. And there, if you subscribe, you get a beautiful weekly Monday morning email summarizing all the real estate articles that we discuss in this podcast and then some that we promote. As I said, we're pushing 2 or 3 articles a day of commercial real estate plus original content through Blue Box Real Estate. If you missed that, you can hear this podcast. If you missed that, on Monday morning, if you're a subscriber, you'll get a beautiful email, non-solicitation, just summarizing everything that we have seen and discussed in commercial real estate. But you see, some of the articles that we're going to talk about are listed right here on our Blue Box Real Estate corporate page. And if you want to connect, throw me a connect. I'm very happy to do that. But I suggest you go to Blue Box Real Estate, LinkedIn. Great way to follow us. Well, without further ado, our episode is 121. CRE, commercial real estate, bounces back. And that's primarily based on this article from BizNow that we're going to take a look at. Before we do, I need to grab some water. See, now you can see that when I grab water, I'm actually doing it from the beautiful Don't Sign the Lease mug. So, yes, you can get merch on the don'tsignthelease.com yourself. All right, leasing bump buoys brokerages as fading hope for rate cuts sinks sales. So that's what we're going to talk about It's an oxymoron, isn't it? Or just kind of a lot of things happening here. Leasing bump lifts or buoys brokerages as fading hopes for a rate cut sinks sales. So what's going on here? You've got sales that are sinking, but you've got leasing that is rising. So let's get into the article. An increasingly active office market helped the publicly traded commercial real estate brokerages post largely positive first quarter results, although the firm's leaders pointed out that the expected return of capital markets activity has again been delayed. Of course it's been delayed because the capital markets depend on interest rates. Cap rates, interest rates, right now they're not lining up. Folks still want a sub-interest rate cap rate. So you're not going to sell an office building or a commercial property for 5.5%, 6.5% cap rate if the interest rates are 7.5%, 8%. You're in negative territory there. So we've got a mesh here. The capital markets have been hoping that the interest rates come down and cap rates maybe inch up a little bit. At some point, they intersect, and therefore we get some more activity in the capital markets. But while capital markets has stymied, the article points out kind of what we're seeing locally in South Florida as well, especially Miami, especially Brickell Avenue, is that leasing activity is up. So CBRE posted a $126 million profit, leading the pack ahead of $66 million in net income from JLL. Congrats, JLL, former JLL, 10-year VP. $43.3 million from Colliers, Newmark, Cushman & Wakefield. Sorry, guys, you're trailing. You reported losses of around $29 million. So not sure what's going on there, Newmark and Cushman & Wakefield, but it looks like CBRE, JLL, and Colliers, three of the largest groups, have posted profits. Executives at the major brokerages said leasing volume is trending positively, lifting a slowdown in the capital markets, space that is expected to reverse by year-end. So they're hoping that by year-end, actually going into this year, people were very hopeful. The Federal Reserve, Jerome Powell, I don't know him by Jeremy, maybe his family calls him Jeremy, but Mr. Jerome Powell said we're going to see probably about half a dozen rate cuts. Well, here we are now in May. It's May 9th. Happy birthday to my brother today. It's his birthday. May 9th, and we haven't seen a rate cut. In fact, we're probably not going to see many, if any, at all, right? So we'll be fortunate to get out of 2024 without a rate increase because inflation keeps going up. I don't have to tell you that. Just go do some groceries or go put gas. You know, as I like to say, here's my outlook of the economy. Go to Costco, see who else is waiting the 20, 30 minutes in line to save 30 cents a gallon with you at Costco. Look around. When you start seeing the Bentleys and the Rolls Royces, you know things aren't well. You know things are pretty bad when those owners also have to save money on gas, and that's what we're starting to see down here at the Costco. All right, let's continue with the article. As the world moves on from the pandemic and as interest rates stabilize, that doesn't mean they go up or down. It just means they stabilize. People will resume to normal course transactions, said Alexander Goldfarb, managing director of Piper Sandler, who analyzes Newmark's performance. Only JLL was able to grow capital markets revenue year over year, up 6% from 2023. CBRE saw the greatest year-over-year decline, 11%, but Colliers was down 9% to $138 million, while Newmark and Cushman & Wakefield saw activity shrink 1.6% and 1% respectively. So not sure what's happening there. It's probably isolated to a few deals, and perhaps we could talk about one of those deals. Yes, I have up on the screen that we'll talk about. Look, one deal of 1 million square feet, or for instance, Nuveen has listed through JLL, and the great guys that used to be Holiday Finoglio here in Miami, 701 Brickell Avenue for $500 million. And I believe they're going to come closer, get that number for 701 Brickell Avenue, 685,000 square foot Class A tower. Incidentally, I did a video on that last week, so go to Blue Box Real Estate YouTube channel. You can take a look at that. But one deal of $500 million or 1 million square foot lease is going to sway these numbers for some of these firms. It's going to be the difference between being the positive or the negative. I mean, a $500 million deal, 1 point, that's $5 million in just one transaction. So imagine how these large deals can sway the profitability of these firms. So in essence, probably CBRE and JLL and Colliers had a few whoppers, while Cushman & Wakefield and Newmark are waiting for their whopper to come through the drive-through, I guess. Brokerage executives said that small uptake in investment sales in the beginning of the year has since been squashed by the realization that interest rates are going to remain elevated, keeping investors sidelined. JLL executives said first quarter investment sales were at a 12-year low. Although the recent uptake in rate volatility will will most likely cause pauses in transaction volumes in Q2. The improvement that we've experienced in Q1 gives us more confidence that global investment sales pipelines are solid and investors are ready to engage when the time is right. Cushman & Wakefield CEO Michelle McKay said in the firm's earnings call. Now, this is what you're missing if you're only listening to the audio, and this is a beautiful chart where you see CBRE 126 million, JLL 66 million, and net revenue gains for Colliers of 43. Now you see negative 29 million for Cushman, negative 29.8 for Newmark. Now, I would have argued that these should be in the red if you really want to paint the best picture. Just a little side note there, Biz now. But going further into the article, the office market continues to be driven by a flight to top-tier assets as firms shrink footprints but opt for premium space as they reimagine a post-pandemic workplace. So what we're seeing overall, we're experiencing this in our local markets, is a flight to quality. This always happens in down markets, but especially in this market. It usually happens because in a down market, for instance, the last huge down market was the Great Recession. I was working Brickell Avenue. One year we're doing $50 a square foot as a high watermark for Class A space. And the next year we were happy to get $34, $35 a square foot. Well, what happens when the market turns and you go from 50 to 34? Now you're in Class B territory. So you got Class B tenants just saying, hey, I'm used to paying $34 a square foot for this, 50-year-old building with not a lot of amenities. Now at 34, I can go laterally and do a flight to quality and go sign a lease at that Class A building with more amenities, better views, higher ceilings, covered parking, all the works, bells and whistles, and pay the same. Well, that's not the case this time. The case this time is a different type of flight to quality, and that is tenants are leasing 10,000 square feet when their lease expires. Now they only need 5,000 square feet. So if they're used to paying $100,000 for that 10,000 square feet, now please just use your imagination because that's $10 a square foot, so don't get thrown off by the analogy, but if they're used to paying $100,000 for their 10,000 square feet in a Class A building or B building, now they're saying, hey, I can cut my staff in half and go into an A building for 5,000 square feet. Now, sure, it's going to cost me the same 100,000 as that 10,000 square foot space, but I'm getting more value when folks come back into the office. I've got huge amenities. I've got gyms. I've got conference facilities, restaurants, cafes, sleeping pods, you name it. It's all here, and I've got a better incentive to ask folks to come back to the office. So what's happening in this downturn isn't a flight to quality because they're taking advantage of lower rental rates. It's a flight to quality because they're taking advantage of less square footage that they're leasing. And this is something new, and we'll see how sustainable this is, but it doesn't spell well for the Class B older buildings. So if you haven't kept up with the Joneses, if you haven't really invested in your property and renovated and added amenities, you're going to be in trouble just a bit in this cycle because tenants are choosing to lower their square footage, but keep the same budget. So instead, they're upsizing or upgrading their office environment and keeping the same budget. That's what's happening here, and that's why the Class A buildings are the ones that are doing all the activity. We just did a video. We released it Thursday, May 9th. This morning on downtown Miami, and that's what we're seeing. Out of 190,000 square feet of absorption in downtown Miami, nearly all of it was in the Class A sector. That's where all the action is right now. All right, listen, there is so much more to cover in this article. If you take a look at leasing revenue, JLL up 14%, Cushman 5%, CBRE 4%, and so forth. And as I've stated, you can see it factually now. We're only covering a smidgen of these articles, so I'm not even a third of the way done, but I'm going to leave the rest for your imagination and the rest for you to reach out to us and connect with us so you can get a hold of these types of spaces, of these types of articles, so that you can stay abreast of what's happening in commercial real estate. Maybe you're in the sector, maybe you touch commercial real estate somehow, but this is all good stuff to keep in mind. And certainly we're happy to sit down privately with you and offer some advisory services. So leasing is bumping up the profitability of the commercial real estate sector. How long that will last? Your guess is as good as mine. It lasted the first quarter. Let's take a look at the end of the second quarter, which will be what? April, May, June. So in July, August, we'll be talking about second quarter numbers. My guess is it's going to temper off a little bit. People have been delaying making decisions, trying to figure out what they're going to do with their company. And so I think there was some pent-up demand. But we'll see what happens in the second quarter. I think everyone's pretty optimistic, at least, that leasing is starting to kind of flow, and that maybe when leasing slows down, then the capital markets will swing back around if there's a change in the rental rates. All right, here's a report from Globe Street. Miami has room for continued growth over the next 5 years. And I'm sorry, office tenants, I've kind of been saying this. I've been hinting at this in our video blogs on Brickell Avenue, Coral Gables, and downtown. And look, this is simply a supply and demand issue. Right now, Brickell Class A is under 10%. You just slipped 10%. And there's some new buildings announced, but they're 3 to 4 years away, easy. I think there's 4 towers that have been announced, but they haven't even broken ground yet. So you're talking 3 or 4 years down the road before they actually make an impact to supply. And then the cost of construction and land today. I mean, look at Citadel bought the Villa Magna site on Brickell Bay Drive for $336 million. That was 2.5 acres, $336 million for 2.5 acres. So their basis is astronomical. So you better believe they're probably going to need $160, $180, maybe $200 a square foot to make that office building work. So this new buildings, 848 Brickell, is another one that's coming down the pike. Construction costs are enormous. Now, they don't have the huge basis point of land cost like Citadel will, but the cost to construct that tower, I mean, it's beautifully designed, but rental rates are going to stay high, in other words, for the next 3 years and probably even thereafter in Miami's Brickell Avenue market due to supply and construction costs. But this is what the article, I think, is hinting at. Let's get into it. According to a recent JLL report, Miami continues to show strong trends regarding flight to quality as both new to market and existing tenants seek new Class A and trophy product space. Miami continues to show strong trends regarding flight to quality as both new to market and existing tenants seek new Class A and trophy product space, with focuses on Brickell, Miami Beach, Coral Gables, Wynwood submarkets. Now, listen, I hate to disappoint you, but Coral Gables is out of premium Class A space. The best Class A space value, 60,000 square feet, Columbus Center. Contact us. We're happy to show you that space as your tenant representative, but $55 a square foot to $58 a square foot. Class A space, 60,000 feet, might even get a name on the building. So that's going to be your best value for Class A space anywhere, in my opinion, in Miami. But guess what? There's not much left. There's not much left of Class A space in Coral Gables. Wynwood, I believe there's still plenty of new product. They overbuilt and are starting to do some deals, but there's probably plenty of opportunities there. Brickell, again, not a lot of options on Brickell. Downtown's where you want to be if you need large block of space. There's all 7 office towers in downtown can give you 20,000 square feet contiguous. 3 of the buildings can give you over 50,000, and 2 can give you over 100,000. So if you want to be in a Class A building and you need a lot of square footage, well, first of all, you need to reach out to us at blueboxre.com. and get a hold of me, and then we'll show you a handful of buildings in downtown that can really work for you. Let's keep going with the article. The report notes that Miami's development pipeline remains robust, with some proposed projects stretching out to 2028, offering room for continued growth over the next 5 years. Many new plans and renderings are concentrated in Brickell, Wynwood, and Miami's most sought-after submarkets, the report says. According to the report, this quarter, Miami recorded approximately 700,000 square feet of leasing activity, down almost 31% from 12 months prior. Though activity slowed relative to last year, this quarterly volume is only slightly less than pre-pandemic averages, signaling a return to normal rather than a drop in demand. Overall, net absorption was positive this quarter, posting just shy of 60,000 square feet. Miami Beach, Wynwood, and Aventura accounted for bulk of positive absorption. So we're going to stop there. Again, we'll let you consider the last article that's on this feed here. All right, listen, probably the most successful lease-up, certainly in Miami's history, perhaps in the United States. It's a bold statement, but I'm not familiar enough with everything that's happened over the last 100 years in New York City. But 830 Brickell Plaza. Let me tell you a little bit backdrop, and we'll read some of this. I don't mind. I usually don't read articles that are kind of like braggamonies, and this one is really propping up Cushman and Wakefield. But I know Andrew Trench. He's a good guy in the industry, and so I'm happy to do that for him. But 830 Brickell Plaza came to market. If we go back in the time machine to March of 2020, it's funny, our political leaders usually, they like to ask this question: are you better off 4 years today than you were 4 years ago? Or are you better off today than you were 4 years ago? And, both candidates are bantering back and forth on that. And the incumbent president said, yeah, would you like to go back to March of 2020? Well, I mean, it depends how it depends what you're talking about. Gas was $1.99 in March of 2020. Food costs were 30% lower in yada, yada, yada. Housing costs was more affordable, right, in 2020. Well, this building, 830 Brickell Plaza, in March of 2020 was trying to lease space at $55 to $60 a square foot. In fact, they signed WeWork for over 140,000 feet. I think it was 146, 164, somewhere in there. I might get my numbers backwards. But that deal was probably done at or about $60 a foot, maybe 55 to 60. Fast forward to tape, they're almost out of space. And the only space they have, they're asking $200 a square foot. In fact, they went back to WeWork and bought them out, from my understanding, allegedly, trying to protect myself, they went back. The developer did, Oco Group, and paid them penny for penny to get out of that lease so they could turn around and lease it for double the rate. Now, why would you do that? Well, you just double the value of the building, right, on a cap value basis. So March of 2020, Brickell tenants, I was working with several tenants in the Brickell area, working renewals, and renewals are at $55 a square foot for Class A space. And I had some clients say, well, that's a little lot. That's a lot. Let's hold out. And I was advising and take it to the bank, sign the lease, let's roll. This thing is going to turn, and turn. It did, and it turned very quickly. In some respects, no one saw the amount of the wave of New York and the Northeast and Chicago and even California that was going to head down to Miami as the pandemic and the lockdowns continued. But I remember talking to a buddy about 830 Brickell and saying, boy, I would not like to be that leasing team. I've leased space during, not pandemics, but during downturns, and you're just going to get beat up and beat up and beat up for a year, and then they're going to probably fire that firm and hire somebody else and then beat them up. And boy, was I wrong. I mean, I was wrong, because it turned quickly, and 830 Brickell became one of the most successful pre-leasing stories in all of Miami, and perhaps, like I said, perhaps even the United States. Let's look at this. The awaited ultra-luxury office tower 830 Brickell vows a 2024 finish. If they do, they do. It's great. If they don't, they don't. Maybe it's early 25. But Brickell's much anticipated Class A plus office tower, and this is a beautiful picture. I was just in Brickell downtown yesterday, and it really is an amazing looking building. It cantilevers over many office buildings. I would love to see the top floors and see what that looks like. It's supposed to be completed second half. Construction is progressing, said Andrew Trench, Executive Managing Director at Cushman & Wakefield. What we call sort of a superstructure. It's complete. Final touches are being made on the glass curtain walls and amenity spaces. The way office construction works is we deliver sort of raw spaces to these tenants. Many of them are already in their space designing and building out their spaces, but we are targeting completion date for the second half of this year. Just because a building is complete doesn't mean the spaces interior are complete. Now, there's the tenant improvements that have to take place, and the contractors and the designers have to come in and start building out the interior. So that's what's happening essentially now, and they're hoping all that will be done by the end of the year. The current TCO date, he said, accurately would be reflected in the third quarter of this year, so they'll know a little bit in a few months. The 55-story building will be housing prominent tenants such as Citadel, not too long, I heard that was only a 5-year lease till their building is ready, Kirkland and Ellis, and Microsoft. The overriding message of 830 Brickell, said Mr. Trench, is it was planned as the tipping point of Miami. Oco Group and Kane International sort of saw this feature for the city. Migration here by major business influencers, CEOs, presidents, investors. Obviously, the pandemic really accelerated it. Yeah, it really did. I'm sure that vision, maybe came to be once the pandemic hit. Really accelerated, which was certainly unexpected, but it was all sort of the movement that ownership team thought was going to happen. Ultimately, the building success, Mr. Trench, is a metaphor for the success of Miami has seen in recent years. Yes, well said, Andrew. We've really been the tip of the spear as new companies decided to open up offices and relocate to Miami. He said their office search always pretty much ended up at 830 Brickell because it was offering them a level of experience and class that they were coming down here expecting. These new companies leave behind multi-million square foot towers in locations such as New York, Chicago, and San Francisco, said Mr. Trench. And 830 Brickell is consistent with the class they are accustomed to, represents the renaissance Miami is going through and has been in the last few years, he said. Now, that team has done so well financially, but look, they're going to do well. They've got a lot of space to lease, and they're on to the next one, right? They've got other developments. Now, it talks a little bit about the building. It's top of the market, best in class. We know that it has a fitness facility, conference facility. I mean, in this market, if you're not featuring a conference facility and a fitness facility in Miami, particularly the downtowns, you're no longer a Class A. It's just now a checkbox to what you have to provide to be a Class A building. All right, the 30th floor, room with a view. They can have coffee, breakfast, lunch, tenant floor, first-class gym, sky lobby, looked at Biscayne Bay, all that wonderful stuff. So, hey, look, somebody left a comment. Jorge Morales. Congrats, Andrew Trench, on one of the greatest pre-leasing successes in Miami history. Look at that. I had someone left a comment. And look, let's leave this podcast by discussing the largest office lease that I've seen this year by far. I don't even know what would come close to this. And this comes to us from Commercial Observer, but I could have pulled countless articles. Everyone was writing about this, and that is Bloomberg. Bloomberg renewed their nearly 1 million square foot lease at 731 Lexington Avenue. All right, so let's put that in perspective. 1 million square feet. There's only one building in all of Miami. I might even say all of South Florida. I might even be able to say all of Florida, okay? But don't quote me on that. But there's only one building for certain in Miami that could accommodate a 1 million square foot tenant, and that's the Southeast Financial, which is about 1.1 million. So they'd have to kick out a whole lot of tenants and go dark in order to do a deal like this. But Bloomberg renews 1 million square feet at 731 Lexington Avenue. And why is this worth highlighting? One, it's New York. I've said before on our podcast. And look, this is episode 121. If you're finding us for the first time on YouTube, we do have audio versions. I have 120 other podcasts. In the first 30 podcasts or so were all interviews. I'm going to try to find a way to upload those. And I think I deleted the audio files. But I'm going to try to find a way to upload those on YouTube, even if it's got some stagnant photos, because those interviews dealt with attorneys, property managers, co-working providers, and so forth. And we had a good discussion back and forth that is long-standing and should be able to help you. Interview someone in the insurance industry to talk about property insurance, general liability, and so forth. So those have a long shelf life. But I welcome you to go back and listen to, especially even the last month, we did a series on office sector woes that would be very helpful to take a look at. But here we see 1 million square feet at 731 Lexington Avenue. New York is a donor city to South Florida. And I've been saying this before the pandemic, and we've been doing this podcast since 2017, believe it or not. New York, as New York goes, so does South Florida. Usually they send us business. We don't necessarily send them business. And when New York does well, we do well. So we cheer for New York to do well and rebound and take care of some of the concerns that they've been having to deal with lately. So we want them to do well, because when New York does well, we all do well. And here the article. Bloomberg signed an 11-year renewal of its 946,815 square foot office lease at 731 Lexington Avenue, Midtown office tower owned by Alexander's Real Estate Investment Trust. The current lease expires in 2029. So you see what happened here. It's 2024. 5 years ahead of time, they already planned their renewal. Part and parcel, maybe they looked around the market and said, you know what, there's not really a product that could accommodate us for the next, and within 5 years. Second, this is a huge win because they renewed all of their space. That's not what we're seeing. The trend, this bucks the trend. The trend's been tenants are shedding 30 to 50% of their office space. So the fact that Bloomberg renewed in 100% of their space is a huge win. And maybe we're going to look back to this article and say, this is the time that someone stepped up and said, no, we're going to keep office space because we want people in the office. We want people working together, collaborating together, and siloing everybody in their own home, in their own closets isn't the way we want our company to work. Maybe we're going to look back to this article and say this was the start of something, because this is the first major corporation that I've seen that has not downsized and given up space when they had an opportunity to. Believe me, they could have probably cut this 25%. We could have read Bloomberg extends their lease 11 years and gives up 200,000 square feet. I guarantee you Alexander Real Estate Investment Trust would have been happy with that deal, even 5 years ahead of time, to ensure that they can keep 700,000 at the risk of losing all 946,000. But the fact that they renewed it all and are going forward all the way to 2029, obviously God willing, we don't know who's going to be here, what's going to happen until 2029, but that's what they did. So now the lease expired in 2029. They actually renewed it and pushed it all the way back to 2040. Now, some of you are doing math very quickly. How old will I be in 2040 if I'm still here or the Lord hasn't returned or called me home? 2040, some of us may not be doing podcasts and doing what we're currently doing. But Bloomberg apparently plans to be doing what they're doing at 731 Lexington Avenue. They have leased space since the tower, in that tower since 2004. And look, that's all. That's like we're in and we're out, all right? So Stephen Roth is part of the ownership group. There you go, CBRE. So I was looking at this article earlier, and it didn't tell us who the brokers were involved, but I guessed that I bet CBRE, since they finished first in the first quarter with profitability, I bet they somehow touched this, and they did. They were the leasing broker, CBRE. You do a 946,000 square foot lease, 11-year extension in New York, rents, Manhattan, rents that are in the, Miami range. That's going to boost your leasing revenue and give you a head start to the first quarter. So CBRE, no surprise, was the broker in the deal. And Vornado Realty Trust and Stephen Roth, who is chairman of Vornado Realty Trust, by the way. I think that's the same Stephen Roth, who owns the Miami Dolphins. And that is going to take a look and wrap up this podcast, episode 121. A lot to get to, a lot of leasing activity. We could have even discussed some more. I've got other venues where we discuss recent leases signed in downtown Miami, Brickell, Coral Gables. I invite you to take a look at those. Before we leave, we always like to end with a Bible verse, and our verse kind of for the podcast has been Proverbs 20:18. Plans are established by counsel, by wise counsel wage war. And that's what we're trying to do. We're trying to provide wise counsel. We're not attorneys here, but we're trying to provide good counsel for your business when it comes to commercial real estate. Listen, I've seen wonderful attorneys. I've seen wonderful accountants. I've seen wonderful chefs and restaurant operators. And I've seen them all fail and their businesses go down. Why? Not because they weren't good at what they did, but because they signed a lease or a commercial space that was detrimental and caused harm to their business. So a bad lease, listen, Bloomberg just signed all the way to 2040. 2040. You better believe they had good representation and good counsel and advisement before they move forward on a deal like that, because for the next 16 years, they're going to have to be dealing with that owner, that lease, and you imagine a bad lease will hamper your growth, will hamper your business, will hamper your ability to hire, relocate, and so forth. So you need to know what you're doing. That's one reason why we're doing this podcast. That's one reason why I authored a book. Certainly why I enjoy what I do at Blue Box Real Estate and helping clients, hopefully treating them like family and working through their commercial real estate. So that's what we're about. That gives you a little hint of what we're doing and what we're trying to accomplish here at the Don't Sign the Lease podcast. Well, I hope that you enjoyed this podcast, and I look forward to talking again once more about commercial real estate. And until we do, I want to say thank you for tuning in. Take care. Stay strong. Together, we're going to get through this. Good day.